Hello, Accounting 441 class. I hope you guys enjoyed meeting with Paul Smith and having any of your questions answered. I'm going to video our last chapter, chapter 17, the Auditor's Report. I'm going to break it up into small chunks, so hopefully it's easier to swallow. But yeah, I just wanted to say congratulations for getting to the end of this semester, even though it was really an odd semester. And also for some of you guys, this is it. This is graduation. So again, I really am excited for you guys, and I'd love for you guys to keep in contact with me. So we are going to be talking today about the auditor's report. And so let me go ahead and share my screen with you. And I'm also going to take down my video so that you guys don't see the ceiling. So the last chapter that we're covering in this class is the auditor's report. So we've been performing the auditor, and as you learned in Accounting 201, what is accounting? Accounting is communication. All right, and so this is where we're ultimately communicating what we've discovered during our audit time and our audit period. Okay? And so the auditor's report, providing an independence, okay? And so, when we talked about certified public accountants, this whole semester we talked about our independence. So let me get our independence, okay? And the whole goal was to give an opinion, right? And so in our expert opinion, on the fairness of the financial statements through the audit, is the most frequently attestation service. All right, and so when we talk about attestation, we're basically giving some credibility to the numbers that we are reading. All right, and so obviously with an audit, okay, because there are reviews and compilations which give different levels of attestation. So when performing an audit, the auditors gather evidence to obtain a reasonable assurance, okay? And why we like that one is that, hey, you know what? There can be errors. There can be errors included in the information that we're reporting on, okay? But it's in a close approximation, and those errors or those estimates or whatever we're taking into account would not change the common man's opinion or perspective of this company and their numbers. All right, and so again, it's in conformity with GAAP, all right, our generally accepted accounting principles, our rule book. All right, and so that's why I said at the beginning of the semester, the best auditor, right, is one who has really good grasp, all right, on financial accounting, which is basically GAAP, generally accepted accounting principles. So the conditions required for a modification of the auditor's standard report. All right, and so we've talked about in the past we referred to an unmodified report as being one that is unqualified. All right, and so I have noted that they've moved away from using an unqualified opinion to really a non-modified report. All right, so it basically means the same thing. So if I apologize, all right, if I use unqualified opinion, that's just what I'm accustomed to. All right, and so conditions, although not departures from GAAP, about which the readers of the financial statements should be informed. All right, so these are when we deviated, all right, from an unqualified opinion. Material departure from GAAP, all right, that's scary, in the client's financial statements. Now, I have gone ahead and posted, an adverse opinion, which is really rare on the Moodle page. So it just takes some time, especially read the auditor's report. You don't have to look at the whole, I don't know, can't remember how many pages, 60 some pages in that thing. So, but just, look up, the auditor's report and read through that, and it's you don't see them very often. Okay, and as far as modifications to the actual or the normal unqualified or unmodified opinion, is when we have scope limitations. All right, scope limitations. We weren't able to see everything, so therefore we can't give an opinion on it. Okay. So typical coverage of audit reports. All right, reports of the financial statements ordinarily include an opinion. All right, that is on both the financial statements themselves. Okay, so the balance sheet, income statement, statement of cash flows, statement of retained earnings. All right, and so again, hopefully, all right, you remember the process. You got to do the income statement before you can do the retained earnings statement, before you can do the balance sheet, before you can do the income statement. And then the financial statement disclosure. That really includes all the notes, all right, to the financial statements. Basically explaining those numbers that are reported in the actual report, the financial statement report. So the auditor's standard report, all right, this is for public clients, all right. And so again, when we say a public client, we're talking about somebody that is being traded on the open stock market. Right. This obviously brings into a higher level of requirements through the SEC and the Public Accounting Oversight Board, Public Company Oversight Board. So it's more thorough. There's a lot more requirements, and so included, all right, in this letter, okay, are the words either registered or independent. Okay. Must be addressed to the shareholders and the board of directors, referencing the auditing standards by the Public Company Accounting Oversight Board, provides a discussion of the auditor and management's responsibility, includes a paragraph indicating that the auditors have also issued a report on the client's internal control over financial reporting. This is not, okay, when we look at non-public companies, right, that is not included. Includes a critical audit matters section, includes a statement on the year audit from, includes statement on the year audit firm began service with the client, signed with the name of the CPA, all right, firm, not an individual partner. And again, it can't be an individual partner, okay, or it can't be a sole proprietor because they are not certified in order to do public companies. It also includes the city, the office with responsibility for the audit, and then dated no earlier than the date on which the auditors obtain sufficient appropriate audit evidence, right, to support their opinion. Okay. And so looking at the different paragraphs now, back in the day, all right, when we had to sit for the CPA exam, we basically had to memorize this whole letter. Okay, now granted, it wasn't as elaborate as it is now because there wasn't a differentiation between publicly traded companies and non-publicly traded companies. All right, but this was one of those areas that I actually had to memorize. Now today, I believe what you'll have to do on the CPA exam is organize these paragraphs, including sentences and things like that are required. All right, and so it's pretty much a cut and paste, which is kind of nice, but you, again, will need to understand the flow of this letter. All right, and so, the opinion paragraph, okay, it starts off, we have audited the accompanying balance sheet of X company, the company, as of December 31st, 2007, 2006, and the related statement of income, comprehensive income, stockholders' equity, cash flows for each of the 3 years in the period ended December 31st, 2007, and the related notes and schedules collectively referred to as the financial statements. In our opinion, okay, and so this is really, the purpose. In our opinion, the financial statements present fairly in all material, okay, so not taking into account immaterial respects that the financial position of the company as of December 31st, 2007 and 8, and the results of its operations and the cash flows for each of the 3 years in the period ended December 31st, 2007, in conformity, okay, with, okay, all right, generally accepted or accounting principles generally accepted in the United States. All right, so yeah, all right. We have audited in accordance, okay, and this is the difference between the one that we'll see later, all right, the Public Company Accounting Oversight Board, okay, the company's internal control over financial reporting, all right, because that's also, you know, not included with the non-public, okay, based on the internal control integrated framework issued by the Committee of Sponsoring Organizations, right, of the Treadway Commission, right, and our report is dated, you know, to express an unqualified, there we go, opinion. The next paragraph, right, or section, right, is the basis of our opinion. Okay, and so the basis of our opinion. Oh, by the way, you know, something that's kind of interesting as part of your early, well, I don't know, as far as in my situation, one of the things that us audit associates had to do was to basically proofread these reports. All right, so you know they basically cut and paste, but then we had to go through and proofread them. And no joke, this is the way that we would have to do it. All right, we'd read basis, capital B, or opinion, capital O, all italicized. These, capital T, financial statements are the responsibility of the company, capital C, apostrophe S, management, period. Our, capital O, responsibility is to express an opinion on the company's, capital C, apostrophe S, financial statements based on our audits, period. All right, so you can imagine we basically had one person reading it and one person checking it as they go. And then you'd exchange, and the other person would read it and the other person would check it, because again, you don't want to send anything out with typos. All right, but we're not going to do that here. All right, so we are a public accounting firm registered, right? So that's why we don't have sole proprietors. All right, to be a registered company with the Public Company Accounting Oversight Board, all right, you're going to be you know, high level. Okay. They are required to be independent with respect to the company. You know, so when we're talking about all those related party, you know, issues, that's one of the reasons. Right, we're claiming that we are independent. We're not being influenced, right, because of a related party issue. Okay. And so, in accordance with U.S. Federal securities laws, okay, so really what we're talking there is the SEC stuff, and the application of rules and regulations of the Securities and Exchange Commission and the Public Company Accounting Oversight Board. We conducted our audits in accordance with the standards, all right? And again, this is different, in accordance with the standards, right, of the PCAOB. Those standards require that we plan and perform the audit to obtain reasonable assurance about whether the financial statements are free of material misstatement, whether due to error or fraud. The audit includes performing procedures to assess the risk of material misstatement of the financial statements, whether due to error or fraud, and performing procedures that respond to those risks, such as procedures included examining on a test basis evidence regarding the amount and disclosures in the financial statements. Our audit also includes evaluating the accounting principles used and significant estimates made by management, as well as evaluating the overall presentation of the financial statements. We believe that our audit provides a reasonable basis for our opinion. What opinion? The letter that we just covered. Okay. Unqualified in this situation. So yeah, know that on the final exam, you're going to have to be able to write that out verbatim. Nah, I'm just kidding. All right. You know, what you want to be doing is highlighting the differences, all right, so that you can, you know, between the different reports, the ones that are for publicly traded companies and ones that are for privately held. Okay. Critical matters, all right, so again, if there are critical matters, critical audit matters, all right, the critical audit matters communicated below are a matter arising from the current period audit of the financial statement that were communicated or required to be communicated to the audit committee, and that one, relate to accounts or disclosures that are material to the financial statements, and two, involve are especially challenging, subjective, or complex judgments. The communication of critical audit matter does not alter in any way our opinion, okay? So if they gave an unqualified opinion on the fairness or on the financial statements, taken as a whole, and we are not, by communicating the critical audit matters below, providing separate opinions on the critical audit matters or the accounts or disclosures to which they relate. And then again, we're signing it as the name of the firm, not as an individuals. And then we're disclosing, that they had audited them for a certain number of periods. Then the address, all right, and the date. And again, this is when we were able to arrive at our opinion. And so what is, all right, a critical audit matter? Okay, and so possible critical audit matters, okay. First of all, is the matter communicated or required to be communicated with the audit committee? Yes, okay, then keep on going. If no, it's not a critical matter. All right, so if there's an issue, okay, that we need to discuss that, all right, with the audit committee, then yeah, it potentially could be a critical matter. All right, does the matter relate to accounts or disclosures that are material, okay, to the financial statements? Again, yes. Does the matter involve especially challenging, subjective, or complex audit judgment? Yes. Then we do have a critical audit matter where we'll have to have that adjusted last paragraph. So the auditor's standard of non-public companies, right? And so this is, the ones that are not publicly traded. Right? So the title includes, all right, independent, okay, ordinarily addressed to the company itself, okay, whereas before we address it to the audit committee or the shareholders, the company as itself, the shareholders, the audit committee, and or the board of directors, okay. Signed in the name of the CPA firm, not the individual partner, unless, okay, it's a sole proprietor, okay. Dated no earlier, again, when we got enough evidence to support our opinion. So a lot of similarities, just a few. It's not as elaborate. Okay. The AICPA's Standard Auditors Report. Okay. The introductory paragraph looks like this. And this is the one that we had to memorize. We have audited the accompanying consolidated balance sheet of ABC Company and its subsidiaries as of December 31st, 2001, 2002, and the related consolidated statements of income, retained earnings, and cash flows for those years ended. Here's the responsibility section. Okay. Management is responsible for the preparation and fair presentation of these consolidated financial statements in accordance with the accounting principles generally accepted in the United States. All right, and so again, this is where it deviates. Okay, these are, first of all, okay, in accordance with accounting principles generally accepted in the United States. Right, so that is GAAP. But I believe well, maybe it's actually the next paragraph. All right. I was thinking I needed to differentiate between, generally accepted auditing standards versus the public company accounting oversight. All right. So our responsibility is to express an opinion, all right, on these consolidated statements based on our audit we conducted, all right, in accordance. This is what I was trying to highlight. Okay. In accordance with the accounting standards generally accepted, right, in the United States. Okay. So it's auditing standards. Those standards require that we plan and perform the audit to obtain reasonable assurance about whether the consolidated financial statements are free of material mistakes. An audit involves performing procedures to obtain audit evidence about the amounts and disclosures in the consolidated financial statements. The procedures selected depends on the auditor's judgment, including the assessment of risks of material misstatement and of the consolidated financial statements, Whether due to fraud or error, in making those risk assessments, the auditor considers internal controls relevant to the entity's preparation and fair presentation of the consolidated financial statements in order to design the audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of internal control. And so if you remember when we looked at the publicly traded company, we said, hey, we're going to also communicate on the effectiveness of the internal control, but here it is, but not for the purpose of expressing. So definitely difference. An audit also includes evaluating the appropriateness of accounting policies and the use of reasonableness of significant accounting estimates made by management, as well as evaluating the overall presentation of the consolidated financial statements. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our audit opinion. And so, the opinion paragraph, in our opinion, the consolidated financial statements, because if you remember, this was presented first when we had the public company. This is now embedded later, I think it's the third paragraph in our letter. So in our opinion, the consolidated financial statements referred to above present fairly in all material respects the financial position of ABC Company and its subsidiaries. The result of their operations and the cash flows for the year then ended in accordance with, and again, not with the public company, okay, but with accounting principles generally accepted. Right? Again, yeah, in the United States. And so in our next section, we're going to talk about when would we modify our opinion, all right? So the other one was, the ones we just covered are the unmodified or the unqualified opinions. And now we're going to look at the modified ones, all right? Or I should say next time.